Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. Ryan, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. It's great to be here.
All right, let's pull up our first chart here. We'll take a look at the Nasdaq-100 relative to the S&P.
Yeah, another good week. QQQ and QQQM advancing by 3%, better than the S&P's performance of 1.69%, and the S&P 500 values performance of 7 basis points. The big move was yesterday after the March CPI figures were released in the morning. Showed month-over-month CPI rising by 0.6%, year-over-year 2.6%. The main driver of that figure was energy, and in particular, you look at something like gasoline prices. They advanced by 9.1% month-over-month in March. That's kind of coming off of some seasonal issues in February, really weather-related, as well as increased demand as human mobility starts to tick up. You look at that on a year-over-year basis, it's around 22.5%. The core CPI, however, which strips out energy and food, was much more moderated. We saw a 0.3% month-over-month gain in March and a 1.6% year-over-year advance. You're kind of seeing the effects of the economic reopening. The biggest contributor to that number was a 3.8% increase in lodging away from home, so really hotels. You're also seeing gains in airfare, recreation, public transportation. So kind of a rebound across these industries that were particularly hit hard, of course, during the pandemic. And I think it's interesting because the challenge here for us over the next couple of weeks and months is going to be the ability to read between the lines on some of these rates of change figures. We're entering into a period where the basing effects from last year are likely going to show very large numbers. If you look at the month-over-month CPI chart over the past 5 years, more recently you'll see declines in March, April, and May of 2020. Kind of the earliest stages of the pandemic. The restrictions were arguably the most stringent and widespread. You really see that decline in the large move lower in April 2020. So, potentially we could be seeing some big numbers here in the year-over-year CPI readings for April and May, along with a number of other indicators where comparisons will be relative to 2020 severely depressed levels. In this example, you see CPI began to rebound in June and July, and as such, I think as we progress towards the summer, those numbers in June and July will potentially not look as drastic. So, over the next couple of months, again, there's going to be a certain extent of reading between the lines of some of these figures. And yesterday, it was sort of the street was in the camp of what the Fed and Jay Powell have been saying, that this inflation is transitory. We saw 10-year and 30-year move lower yesterday, and kind of going hand in hand with that may have been aided by the news of the U.S. halting the use of Johnson & Johnson's vaccine on very rare instances of blood clots. CDC is going to be reviewing the vaccine today, but essentially, the street kind of takes news on a slip up of vaccine distribution as a sign that, hey, that could be a longer runway for the Fed remaining accommodating.
All right, and to wrap up here, let's take a look at sector performance.
Yeah, so another good week driven by QQQ's overweight sectors, technology, discretionary, and communication services. When you look from a sector by sector perspective, all 7 sectors that QQQ has exposure to ended the week in positive territory. While energy and materials, which QQQ does not have exposure to, as well as consumer staples within the S&P 500 saw negative performance. Tech really being led by Apple was the largest contributor to QQQ performance, as well as relative outperformance against SPY. Stock was up 6.5%. You see some excitement and optimism around their spring-loaded product event scheduled for next week, April 20th. Expected maybe a new iPad Pro, new iMacs, and AirTags, which are rumored to be tracking tags for devices. You look at another example of relative outperformance that was driven by Tesla. They were the second largest contributor. The stock advanced by nearly 9%. You saw an analyst upgrade that referenced the opportunity that exists within the energy market, specifically around Tesla's power generation and storage capabilities, making it a potential leader in the space. There also could be some optimism ahead of earnings, which is scheduled to be released just under 2 weeks after the record global deliveries announcement last week.
All right, Ryan, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.